Greetings, everyone. Greetings, greetings, greetings. Welcome, welcome, welcome to another episode of Tea Fresh Realty. I am your real estate queen, all right? So, today we're going to be discussing myth busters, okay? Myth busters. And what are the myth busters? Home ownership is too complicated, right? It's just making sure I can be heard, y'all. Excuse me for starting so late. I know it's 9:08 p.m. I'm only going to be on here for about 30 minutes, but I am keeping my commitment to having these weekly Zoom meetings and these Zoom sessions. So I just want to get into some of the myth busters um, that, might plague certain people's minds. One thing that I did hear, I heard a YouTuber say he is paying $7,500 for rent and he's living in a penthouse no, a penthouse apartment out in Dallas. So if you watch that YouTube channel, you might know who I'm talking about. $7,500 in rent, you all. And that's just living in a penthouse apartment. He made the comment that he feels like purchasing a house, home ownership just seems like it's too complicated. Let's do some basic math real quickly. Okay. Now, there were a lot of people in the comment section that did say that, hey, he's throwing his money away when it comes to renting a place. So I'm going to go ahead and do some math for y'all. Just a second, okay? I'm going to send this live stream out to a couple of people if they want to join. Just a moment, y'all. And this is kind of like a last minute situation, so don't mind me because I tend to do this sometimes. Mm-mm-mm. All right, so this is just in case anybody wants to tune in, click in to see what I'm talking about. So, like I said, home ownership is not that complicated. Now, if you're paying $7,500 in rent and you signed a 12-month lease, that means that that YouTuber just paid $90,000 to the apartment complex that he's living in. Now, whether that is considered luxury or a penthouse or whatever have you, that does not negate the fact that he just basically gave away approximately $100,000 worth of his income. Um, so that money he will not get back, okay? The money he will not get back. If he had a home for $7,500 a month, more than likely he would be living in a very nice house, okay, in a very high affluent neighborhood, you all. Pretty much a mansion for that amount out in Dallas. So I just wanted to make it clear that a myth buster is that home ownership is complicated. Purchasing a home is complicated. It's not complicated, y'all. It just takes discipline for people that really want to make this their goal. And right now we're dealing with the remnants of people that have been impacted by COVID. People have lost their jobs. I know that that was about 5 years ago, but people are still trying to recover because one thing about it, it's a trickling effect, right? So first it hits, and then bam, there was an issue with people not being able to work, people having to close businesses. Even here in Charlotte, what I am seeing is that there are still businesses that are shutting down. I don't know if you all are familiar with Zeta Janes or Zeta Janes, but they used to serve like breakfast all day. Like I went there like on a Tuesday. And I had been there, I frequented that place maybe a few times. I could count on my hands how many times I went over there. Um, but they had to shut that business down. Also, I don't know if you're familiar with Maddie's Diner right off of the plaza. If you haven't had a chance, I don't know if they've shut down yet. Please make your way over to Maddie's Diner. I have frequented that business quite often. I haven't been there recently, but I received notification on my phone that they are actually shutting down Maddie's Diner. So my whole point in making this reference is that, hey, there are businesses that have been around for many years that are shutting down. And I would say it's because of this economy, but also it could be the ramifications of when COVID hit. There are people that have not recovered because of a loss of a job due to COVID. They had to pivot, transition throughout this time, and actually had to navigate their way through, getting side jobs, getting jobs that they wouldn't regularly do, right? So this is why I say if you are able to afford a home, I would go ahead and do it when you can instead of trying to time the market. I hear a lot of people say, I'm just going to wait until, another year. I'm just going to wait until next year. I'm just going to wait. I'm just going to wait. And a lot of times when they wait, it never happens. You see what I'm saying? So home ownership and home purchasing is not that complicated, y'all. I feel like I repeat myself so much, on this channel. What do you really need for home ownership? Not that much. 2 years of steady income, and that could be 1099 or W-2. It has to be one or the other. You need a credit score of at least, I would say you can get it at a 625, but if you can get 640, then that would pretty much get you into the down payment assistant programs for Charlotte. Giving there's up to $145,000 that you're able to utilize, especially if you're trying to get into a home. And it's not just for first-time home buyers only, you all. It's for those who just does not have a primary residence in their name. Another thing that you would need is your debt to income ratio needs to be around 45% or under. The lower, the better. So that means that you have more money coming in than you have going out. So if you have student loans, that is factored in. If you have a car payment, if you have credit cards, all of those things are factored in. So please try to pay down credit cards. Stop using it if you can. Stop using your credit cards. Pay down any personal loans, installment loans, revolving loans, all the loans, the payments, the medical bills. Try to get rid of those things and just have some discipline for yourself. You owe it to yourself. If you have a family, if you have children, you owe it to yourself to be a homeowner, y'all, um, because it is a great way of building wealth. Is not complicated at all, like to purchase a home. I don't know why people have that misconception. So I'm just here to kind of go over that. If y'all ever have any questions, please feel free to contact me or post it in the comment section. If you have any topics that you want me to speak on, please feel free to reach out. You know now, you can email me. You can reach out to 980-428-2333. I feel like Mike Jones giving out my number, 28004. Let me stop. But no, for real. It's 980-428-2333. If you ever want to have a one-on-one consultation with me, and we can see where you stand in the whole process, whether you are trying to sell real estate or if you are looking to purchase real estate, it can be very financially advantageous for you. Um, what else can we say about home ownership? You all, I think this is important, which is something that I was going to touch on in my next Zoom live meeting. But I think I'm going to go ahead and talk about it right now. So what I have in front of me is the North Carolina Real Estate Principles and Practices. This is a very thick book, but this book is still um, very relevant because it's regarding North Carolina state law. And we actually had to go through this entire book for me to become a realtor. I never got rid of this book, but it goes over so many useful things. And I want to actually go over some things that people might not know about home purchasing, because there are certain things that go on with lending. There are certain things that go on with the type of loan that you would secure if you are purchasing. Okay. And there are many different ways that this is factored in. People don't really understand what's going on in the transaction. That's why I'm having these Zoom meetings to help people understand. Okay. All right. So let's go ahead here. This is this is going to be chapter, let me see, 11. Um, All right, so let's get into this because some people don't understand that you can assume someone else's loan. All right. If you've never heard of an assumable loan, or if you have heard of an assumable loan, I'm going to actually tell you what the definition of what the Real Estate Commission says that is. It's a loan assumption where the seller whose loan was assumed remains liable for the loan and payment of the note unless specifically released from liability by the lender. Okay. So, say you are looking to purchase a property that is pre-built, and because people keep talking about the interest rates being high, which right now interest rates have gone down to around 6.5%. So they have actually come down. But say that when this person purchased that home, they were able to get in, move. Sorry, my cat is in the way. I'm going to put you in the cage. Okay. Some people may have like a 5.25% interest rate, a 3.49. I've heard as low as like a 2.5% interest rate, and they're trying to sell their home. They might be relocating, they can't stay there. They might be going cross country because a lot of people, that's why they didn't sell because they're like, if I sell my house and I have to get back in another house, interest rates have gone up, so I'm staying right here, which that's very understandable. And that's a lot of times why people did not refinance. Okay. But say you want to purchase that home. Now, what you can do is you can do a loan assumption, meaning that you would take on the terms of the loan that home seller has. So you would get their interest rates as long as you can qualify for that loan. You can get, she jumped up here anyway. You can get that interest. You're going in the cage. Hold on, y'all. 1 second. Keep going. You're going in the cage. Go ahead. You do this every time. Every time I let you out. All right, y'all. Now, I can't find my place in my book, but basically, I'm going to let her out later. So excuse me for that. I'm sorry. She's fine. She's probably going to start crying in a second, but she's in her cage. So basically, like I said, you still would have to qualify to make sure that you can meet the terms of that loan. But as long as you do qualify, you would be able to assume the interest rate that that seller has for that house. So a lot of people are not aware of that. I just wanted to go over that. Okay. Let's keep going, y'all. So, oh, we're in chapter 11. Sorry. I hear a lot of people ask me about purchasing foreclosures. I want to get and the reason people say they want to purchase a foreclosed home is because they think that there is some type of way to circumnavigate around actually qualifying for a house. So they'll say, "Oh, do you have a list of foreclosures?" And a lot of times these people don't own real estate at all. Unless there's some type of investor, then they should already know how to go that route if they're looking at foreclosures. But for people that are very green in real estate and don't know much about it, I do hear people ask me a lot about a foreclosure list. All right. So if you're thinking about trying to do a foreclosure, that is more of a complicated process than actually qualifying for the loan in a conventional way. And the reason they think they can do this is because they think they're going to get a deal on a house. Let me tell you something. When you look at foreclosed homes, first of all, these properties can be distressed, okay? So unless you actually have the funds, meaning cash, to put into this property to bring it up to code, because If you think that you're going to go in there with no money, hardly to any money, purchasing a foreclosed home, it's not going to work like you think it is. A lot of times people don't have the funds to purchase, so they try to get like a foreclosed home thinking that they can just get a better deal. You have to understand that if you secure a loan on a house, unless you have the cash to purchase it, you cannot just purchase any type of property because FHA, which is a loan, it's a loan that is lended to you by the federal government. A conventional loan, well, I'm going to say this, a FHA loan is going to have certain requirements. They're going to have to do an inspection on that house. A VA loan, they're going to do an inspection on that house. These loans that you qualify for are going to require inspections on that home before you actually close on the home, before you even, feel that you can make it to the closing table to purchase that home. So we need to understand, greetings, Solar Guide, greetings. So that's why we need to be very careful when we say these things. I want to get a foreclosure home because it doesn't necessarily work the way you think it does. Thank you, Solar God, so much. If you have any questions about anything, please type it in the chat section. All right. Um, so I just wanted to make that very clear. Now, let's keep going, y'all. So also we have something called a short sale. And a short sale, y'all, can be a little bit more complicated than what people realize. So we really, if you're trying, if you're a first-time home buyer and you're thinking about purchasing, you really want to stay away from foreclosures and short sales, right? Unless you have the cash to purchase. Um, and then again, we talked about loan assumptions. Let's get into conventional loans for a second. So conventional loans can be really good. Usually we see second time home buyers or people that have already purchased homes that have like more of a cash flow or more money saved up. Those are the people that usually utilize these conventional loans. And a conventional loan is one that has no participation by an agency of the federal government. So the federal government does not necessarily fund these loans like they would do for the FHA loan, okay? Um, these conventional loans can be uninsured or insured, okay? So let's go ahead and break this down. So in the uninsured conventional loan, the borrower's equity in the property provides sufficient security for the lender to make the loan. Therefore, insurance to protect the lender in case of the borrower's default is not required. In these cases, the borrower obtains a loan that does not exceed 80% of the property value and thus has an equity of at least 20%. Okay, so sometimes these people will have more money to put down on the house because they might only borrow 80% of the loan, if that makes sense. Usually, a person that gets an FHA loan, they put down 3.5% of the purchase price because they don't have that much money on hand. All right. So this is why you see a lot of first time home buyers go into their homes with an FHA loan. And then if they're able to sell that house, they get the proceeds and they're able to get into a conventional loan, which can be more advantageous because we just talked about the fact that they may have insured or uninsured, okay, borrower's equity. So let's keep going, you all. An insured conventional loan typically is a conventional loan in which the borrower has a down payment of less than 20% and therefore borrows at least 80% of the property value. In these cases, ensuring repayment of the top portion of the loan to the lender is necessary in the event the borrower defaults. All right, so you can have the uninsured conventional loan and the insured conventional loan. All right, let's keep going. The insurance is called, okay, so the insurance on the loan in case the borrower defaults. Listen to this, it's called private mortgage insurance. You've heard me talk about PMI and private mortgage insurance. So on a conventional loan, you may see private mortgage insurance. This is insurance on the mortgage in case the borrower defaults on the loan, all right? Private mortgage insurance companies issued the policies. Today, PMI companies insure more mortgage loans than the FHA does. The premiums and features of PMI have grown more varied and complex in recent years. All right, so when you hear about a conventional loan, that is the difference, y'all. Okay, and then we have conforming conventional loans and non-conforming conventional loans. The non-conforming conventional loans do not um, meet these guidelines and standards. By making a conventional loan that is conforming, the lender has the ability to sell the loan in the secondary market, thus freeing up funds for future loans. There will be a more detailed discussion of conforming slash non-conforming, as well as Fannie Mae and FHLMC guidelines in the secondary market section that appears later in this chapter. Okay. So another type of conventional mortgage loan is the home equity loan. A lot of people have heard of a HELOC, home equity line of credit, everybody. In this type of loan, the borrower will pledge his home as collateral to set up a line of credit that can be drawn against the home. We see a lot of home buyers do these HELOC loans when they go to fix up their houses. And because they feel like this adding value to the property, they feel pretty confident to take out the HELOC loan. So sometimes people have to get like a roof repaired or just major things done to the home. We have people will take out a HELOC loan. All right. When I used to work for the bank, at Bank of America, there were a lot of people that had lines of credits taken out on their home. This is how they're able to take out like $35,000 against their home. But you have to have a certain amount of equity already built up in your home to do this, okay? So I just wanted to explain that. Typically, the lender will establish a maximum amount of loan that can be obtained using the HELOC, which is the HELOC loan. The borrower can borrow funds and later pay down the balance and later borrow again using the same mortgage. Okay. Unlike most mortgage loans, the borrower can pay the balance down to zero, but the mortgage loan still exists where the borrower can continue to borrow against the line of credit. So if you pay this off, right, the loan still sits there and you can still, well, I'm not going to say the loan still sits there. The ability to borrow against the loan still sits there, even if you paid it down. So say you need to borrow against it again and you've paid it down, then it's still open to you to borrow from. Okay. So let's keep going, y'all. These will often serve as a second mortgage and can result in foreclosure if the borrower becomes delinquent on the payments. So you have to be very careful with these loans, you all, because if you don't pay these, then you just heard it could result in a foreclosure. All right. So that is a non-conforming loan, and that's the type of loan we're talking about is a conventional loan. All right. Now, the conforming conventional mortgage loans are those that comply with Federal National Mortgage Association Federal Home Loan Mortgage FNMALA guidelines and are made using standardized loan forms. All right, let's keep going, y'all. Also, we have the FHA. All right, very, very popular loan is the FHA insured loan. Okay, part of the mission of the FHA, created during the Depression of the 1930s, was to make home ownership available to more people, to improve housing construction standards, and to provide a more effective and stable method of financing homes. It succeeded in this mission and provided the leadership to standardize procedures for clarifying buyers, appraising property, and evaluating construction. FHA has been an agency of HUD since 1968. Now, let me tell y'all something about 1968 and why I feel that the FHA loan was introduced to make housing more affordable. Also, if you were not aware, in 1968, the Fair Housing Act was enacted to stop discrimination against mainly people of color, okay? Because prior, and that was only 57 years ago. Do the math. 2025 minus 1968 is 25, sorry, it's 57 years ago. So less than 60 years ago, some of us have parents in their 60s or you may have grandparents in the 60s, or you may be in your 60s. But it's only been 57 years ago that the Fair Housing Act was put into place and enacted, and this was for people of color, okay? Melanated individuals were not allowed to basically purchase real estate fairly in the United States of America or practice real estate fairly in the United States of America. I feel like that's very important. And I feel like this is something that we all should have a part in. We should all be able to purchase real estate freely in this land, especially because our ancestors, sacrificed a lot for us to be here and to be able to participate in this country to purchase real estate. Um, so let's keep going, y'all. The FHA does not make mortgage loans or supply the funds for FHA loans. Instead, the FHA insures the loans on real property. Real property is what's attached to the land. So if you have a mobile home, that's not really considered, let me take that back. If you have a trailer, that is not considered real property because it's still attached, excuse me, to the wheels. It has to be attached to the land for it to be considered real property. Okay? So that's what they're talking about when they say real property. So FHA does not make mortgage loans or supply the funds for FHA loans. Instead, the FHA insures loans on real property made by FHA approved lenders. An FHA insured loan protects lenders against financial loss. Okay? Let's read that again. An FHA insured loan protects lenders against financial loss. The buyer pays for this insurance protection by paying an upfront mortgage insurance premium. You've heard me talk about mortgage insurance premium. So on an FHA loan, you have mortgage insurance premium. On a conventional loan, you have private mortgage insurance. Okay, it's PMI versus MIP. It's just three letters, but in a different sequence. PMI is conventional. MIP is FHA. Private mortgage insurance is conventional, and mortgage insurance premium is FHA. All right. So that's how you can tell the difference on which loan type that you have. All right. Let's keep going. So you're going to pay mortgage insurance premium for having an FHA loan. It's prorated monthly and it is paid with your monthly mortgage payment. This insurance enables the FHA approved lenders to provide financing when the loan to value ratio is high. As explained earlier, loan to value ratio compares the loan amount to the property value. With a high ratio, the borrower has to make only a small down payment. This is why you only pay 3.5% down when you purchase a home with FHA. The amount of insurance protection to the lender is sufficient to protect the lender from financial loss in the event of a foreclosure sale because these loans are insured for 100% of the loan value. So do you see the difference? Conventional loan is 80%. FHA is 100. All right? I mean, they're lending you more money. Conventional is lending you 80%. Let's keep going. The most popular FHA program is FHA 203B loan, which allows an owner occupant to purchase 1 to 4 family dwelling with an FHA insured loan. FHA now offers a reverse mortgage. A lot of older people take out reverse mortgages, you all. FHA 255, which is designed for senior citizens age 62 or older, okay, who need to access the equity in their home while continuing to occupy it. The FHA 255 provides a monthly income for the mortgager and sometimes also pays debts or the existing mortgage. The mortgage loan does not have to be paid as long as the mortgagors continue to occupy the home. So this is very advantageous for people that are older, like in retirement age. When their occupancy terminates, the property is sold and the mortgage loan is paid out of the proceeds. The FHA 245 graduated payment loan, the FHA 203K purchase and rehabilitation loan, and the FHA 234C condominium loan are also available when circumstances warrant. Okay, and they're going to get into these different loan types. I'm not going to actually get into all of that right now because it can be confusing if you are not actually taking a real estate class and sitting here studying these things. Okay, let's get into the actual FHA loan qualification. Okay, under FHA loan qualification guidelines, the monthly housing expenses composed of principal. Listen to this now. Principal, interest, and taxes, homeowners insurance, MIP is paid, homeowners association dues or assessments, if any, cannot exceed 31 gross income. So whatever you make, you need to multiply that by 0.31%. And that is the amount that should not exceed, okay? The total housing expenses plus any of the borrower's recurring monthly debts that will extend for 10 months or more cannot exceed 43% of monthly gross income. All right, so remember I told you your debt to income ratio needs to be around 45% or under. They're saying it shouldn't be over 43% of your monthly gross income. That is how they determine if you're able to qualify for a loan. All right, there's actually a calculation that they do to make sure that you're able to secure your home mortgage loan. All right. VA loans are, like I said, the most advantageous loans, and we're going to get into that just a little bit. I'm going to skip over some of this. Um, Let's go into VA loans, okay? The FHA programs insure loans. The VA guarantee loans made through the VA approved lenders. Under a VA loan guaranteed loan, the VA guarantees repayment of the top portion of the loan to the lender in the event the borrower defaults. Unlike the FHA, the VA does not set maximum loan amounts. The VA guaranteed loan can be 100% loan, which requires, listen to this, no down payment. All right. So, for those of you, if you are a veteran, please contact Tigres Realty at 980-428-2333 because a lot of people they don't understand how their VA loan works. So, this is why I'm going over this. Okay. Again, the VA loan is a guaranteed loan and it can be 100% of the loan amount, which requires no down payment. This is why I said the VA loan is one of the most advantageous loans of them all, in my personal opinion. The VA provides this certificate, sometimes informally called the VA appraisal, to the lending institution. So you get a certificate of reasonable value, a CRV is what you get, and it's or 100% of the sales price, whichever is less. All right. The VA guaranteed loans are available for the purchase of uh, or construction of 1 to 4 family dwellings. When obtaining the loan, the veteran must certify in writing that she or he will occupy the property being purchased. If the veteran is on active duty, occupancy by the spouse will meet this requirement. So you can be married and your spouse can still live in the dwelling. If the property is a multi-family dwelling, maximum of 4 units, the veteran must occupy one of the 4 units. To be eligible for this VA loan, for the borrower to be eligible for a VA guaranteed loan, he must qualify as a veteran under VA requirements. If he is not on active duty, the veteran must have been discharged or released from duty under conditions other than dishonorable charge. Okay, the length of service required for eligibility depends on length and date of service and whether service was in wartime or peacetime. Members, okay, of the National Guard and reservists are also eligible for VA guaranteed loans if they meet the time requirements. In some cases, veterans, widows, and widowers who have not remarried are eligible for a VA guaranteed loan. So if you're passed away, oh, hold on 1 second, y'all. If your spouse was in the military, I don't know what just happened here. Did my microphone disconnect? All right, y'all. So I think my microphone disconnected. Okay. And it reconnected. If your spouse was in the military and they passed away and you have not remarried, and you would like to use their VA loan benefits, you can use their VA loan benefits, y'all. All right. So in case you didn't know, this this can apply to men or women. All right, men or women. All right, let's keep going. I think this is some really good information for y'all. All right, let's keep going. Let's keep going. Let's keep going. The length of, okay, so um an eligible veteran with full entitlement may be able to obtain a VA loan with no down payment. The loan amount not to exceed the FNMA loan limit, which changes each year. That limit was in 2013, it was $417,000. We know houses have gone up since then, so I'm guessing that that amount may have gone up. Okay. They have a VA funding fee. Okay. And then qualifying. Let's get into qualifying for the VA loan. The total housing expenses plus any reoccurring debts that extend for 10 months or more cannot exceed 41% of monthly gross income. Okay. So you want to have your debts at 41% or under. Okay. And there is a calculation to figure that out. Um, there's also a USDA loan, y'all. I'm not going to get into all these other loans. I'm going to really stop right there. But it sounds more complicated than what it is. But guess what? This is stuff that you really don't have to worry about. All you need to do is contact me so I can get you over to a lender. And I do have a lender that handles VA loans specifically. I have a lender that handles conventional loans. I have a lender that handles FHA and USDA loans. So any type of loan type that you may need to get into the home to qualify, I have a lender for that. I have a lender that helps you with down payment assistance. I have a lender that helps to pay the closing costs. You just need to get with me and then we can take it from there. You don't even have to worry about all of what I'm talking about because the lender's going to break it down to explain to you what you need to do to get into the home. All you have to do is fill out the credit application. If they say, okay, go ahead and fill this application out, submit these documents, that's all you really have to worry about. The rest of it is up to us. And you just make sure that you do what you're supposed to do. Meaning don't open up any credit lines, don't go and buy a house, don't go purchasing things that requires you to utilize your credit. Keep saving. Keep your debt to income ratio as low as possible. Keep paying things down, paying things low. Um, Even if you want to, you know, uh, take on another job, get more money, take on, a side job, a side hustle, whatever you need to do to increase your income, those are the things that you're going to worry about, but not all of this stuff in the background that require us to study when we go to real estate school. And actually, a lot of that stuff that I just read to you is really handled by the lender, but they require us to go over it and to know this. But really, what we do is whatever type of loan type you have and whatever you qualify for, we make sure that we find the real estate that fits your needs within those parameters. So that's really what our job is as a realtor. Everything else is really handled by the lender. But I just want to say thank you so much. I think I've been on here for about 30 minutes now. I want to say thank you so much for tuning in to the people that showed up. Thank you to Solar God for showing up. If you have any questions about real estate, again, my number is 980-428-2333. I do have some houses that I'll be posting. I will be hosting this weekend an open house. I don't know if I'm going to do it Saturday and Sunday. I have to check my phone, you all. But I will be hosting this weekend and I look forward to coming on here. I might go live. We'll see while I'm at the open house. Okay. Um, she sent me a message at 8:03 p.m. So I gotta go ahead and get ready and get prepared for this weekend. I really Yo boy Smooth 18. What's good, yo boy Smooth? I think I froze up. How are you? Are you in yo boy Smooth 18? What city and state are you in? Where are you located? I'm just curious. Yes, I will be hosting this weekend, everyone, an open house. And so I'll probably go live from there. I have some footage that I'll be posting on the channel. I do have some new construction communities that I'd like to post as well. And I'll go over that with you. You said you're good? Okay, I'm glad to hear that. Thank you for joining. Thank you for joining. You in Gastonia. Wow. Okay, so you are not too far. I'm actually located in Charlotte, yo boy. Yo, boy, are you in a home? Are you looking to purchase? What's going on with you? Gastonia is not, it's about 45 minutes from where I'm located, actually. I'm all over the place. I've been out to Gastonia. We actually, for Juneteenth, yo boy, our firm did we did a networking event out there, but this was like a few years ago. We were out in Gastonia, me and some of my colleagues. They had like a big networking event for Juneteenth, and I went out there and I set up a table and stuff. Looking to purchase very soon? You need to hit me up. Look, take my number down. I'm going to put it in the chat for you. Make sure you text me too. 980-428. I feel like Mike Jones right now. 980-428-2333. Reach out to me, hit me up. Just let me know who you are. We can connect. We can get you ready. Hopefully, we can get you some down payment assistance, to help you get into your home. But we can do all of that, behind the scenes. Make sure you also, your boy, make sure you follow my Instagram. It is T Gresh Realty, just like what you see here on all platforms. T Gresh Realty on TikTok and T Gresh Realty here on YouTube. And make sure you subscribe to the channel because I will be coming on here. Thank you. I appreciate you. I'll be coming on here more often too. On Wednesdays is what I have. Real Estate with Tanita. By the way, nice to meet you. I didn't tell you my name. My name is Tanita Gresham, and I have been a realtor out here in Charlotte since July of 2020 is when I affiliated. But I was also licensed in Virginia back in 2007 when that big housing crash happened. I don't even know if you were around back then or if you remember, but I did talk about that previously on the channel. But now they've made it more secure for people that want to purchase to make sure you can actually afford the home. They pull your credit about 3 times and they will pull it on the day of closing as well, just to make sure that the home buyer can secure that loan. And that's one thing that they negated to do back then. So this is why a lot of people got scared and fearful and they were like, we're going to have another housing crash. But that hasn't really happened right now. I do want to let you know, yo boy, since you're on, this is my first time seeing you. It's very hard. I know a lot of people have misconceptions about home ownership, but it's very hard to like lose your house. So like if you do purchase, like say you purchase a townhouse, a condo, or just a regular house, it's not like people make it seem like, oh, you miss a payment, you lose your house. I promise you it doesn't happen that way. I have a lot of videos talking about it. Out here in North Carolina, they do have ways to stay in your house. Like they have programs for you. So if anything ever were to happen, you can actually defer your payments for up to 6 months. And you can stay in your home until you get back on your feet. You just have to talk to the mortgage company. So it's not like people think. And that's why I'm on here is just to get over the misconceptions of home ownership because like I said, we as melanated people, we were not able to freely purchase real estate until 1968 is when they actually implemented the Fair Housing Act. So everybody else was able to do this except for certain people. It was a discrimination going on. My next live stream that I'm going to do on my Zoom, make sure you also follow me on my Facebook. So my Facebook, I'll type it in the chat because I'm going to do more live streams and I would love to have you on. If you have any friends, relatives, family members that would like to join, I'm going to do a Zoom meeting next week, and it's going to be talking about discrimination with real estate. And there's, of course, you may have heard of redlining, steering, and blockbusting. How do you spell my name? My name is, I think I just typed it in here, but I'll type it again. Okay, and that's how you find me on Facebook. So make sure you request me and I will accept you as a friend. And you can join my real estate group. It's called Real Estate with Tanita. Real Estate with Tanita. And I would love for you to send the link out to anybody that you know that may be interested in real estate. One thing I want to do is I would love to help as many people as I can, especially for those who have been discriminated against in the past and not understanding how real estate can really help you acquire and build wealth. If you go back and check, some of my prior videos that I've been doing, I go into more detail and depth about how that can happen, how these things can help us progress forward financially, because I see a lot of other communities that have been doing this, and a lot of us, for some reason we've fallen behind in the totem pole for lack of financial literacy and just having lack of knowledge, not knowing, and it's just being a generational cycle. So what I'm trying to do is bridge that gap, within home ownership the best way I can, and just having these Zoom meetings. So thank you so much for coming on. All right, y'all. Well, I am. Oh, okay. I am actually going to go ahead and sign off of here. I've been on here a lot longer than I wanted to be on. Thank you so much for everybody that has tuned in. Thank you for watching. Thank you for listening. This is T Gresh Realty, and I'm going to close out by just saying, remember to always be the CEO of your financial future. How do we do that? By creating economic ownership. CEO, create economic ownership. How do we create economic ownership? By owning real estate and owning businesses, right? Okay. So if y'all have businesses, oh, thank you. So if y'all have businesses, we definitely need to support one another. And if y'all are, thinking about real estate, you have real estate questions, real estate concerns, please reach out to me. If there's something that I cannot personally answer for you, you have a great night as well. I have a team of experts at my disposal, even real estate attorneys that we can actually contact on your behalf. Okay. So don't think you're bothering me, but that's what we're here for. All right, y'all. I'm going to sign off. I will talk to y'all later. This is your real estate queen signing out, and make sure y'all follow me on Instagram and TikTok, and you can find me on Facebook as well. All right, so we'll be back on here, hopefully live next Wednesday, August the 13th at 7 p.m., y'all, Eastern Standard Time. Signing out, y'all. All right, let me go ahead and end it now.